Let's now turn to a lease modification in practice and walk through the calculations in the context of a real-world lease. To do this, we'll go all the way back to the very first lease we recorded at Precision Industrial for the Model LX5000 piece of equipment. So I have the schedule we calculated pulled up here, and note that when we recorded this at lease commencement, we classified it as a finance lease. So we're amortizing our right-of-use asset straight line over the term of the lease and recording our monthly interest and amortization expense on our P&L. You'll also recall that included in the contract was a non-lease component, this service and maintenance component here. But we've elected to use the practical expedient available to us under ASC 842 to combine lease components and their associated non-lease components for both our equipment and building asset types. So we recorded this entire contract as a single lease component, and our payments on our lease schedule reflect the full payments made under the contract. Now let's assume it's May 1st, 2026, the very beginning of the 6th month of our 36-month lease. And let's say that for whatever reason we've decided to negotiate a change with the lessor. Instead of relying on the lessor for service and maintenance, we've made the decision to purchase a maintenance program with a third party. The lessor has agreed, and we've entered into an amendment to the lease, which you can see here. The important points in this amendment are here, that Section 4 of the original lease, which is the service and maintenance portion, is deleted in its entirety, and then very importantly this Section 2 here, which states that our monthly payment will be decreased by $1,000 per month because the lessor no longer has to provide maintenance. So we clearly have a lease modification, but which type? While it may appear on the surface that this is a partial termination, in reality that's not the case. The maintenance portion was a non-lease component that we wrapped into the lease component. So we have no termination at all of our lease component from this amendment. Our right of use to the underlying asset has not changed. So from an ASC 842 perspective, we'll account for this modification as a change in consideration only. Under ASC 842 10, 25, 11D, changes in the consideration that do not result in a separate contract are accounted for as a remeasurement. Which means as of May 1st, 2026, we'll need to remeasure our lease liability and reassess our classification. So let's do that now. To begin, this process will be identical to the remeasurement we looked at previously. We'll rename this worksheet to 1.1, make a copy into our archive section, and rename that to 1.0. Then in our archived worksheet, we'll copy and paste this entire sheet as values. Then our last calculation before our modification on May 1st, 2026 is period 5, so we'll highlight that orange again just to make it easy to visually reference. Now back here on our working schedule, let's freeze the periods before our modification, so we'll copy and paste as values. Give the frozen periods a light gray background, and highlight orange the last period prior to modification. Finally, we'll just add that break in our schedule for visual clarity. Okay, then for our schedule, we will reset the first period post-modification to 0, set the date to our effective date, and the first period to the end of the same month as our effective date. We'll highlight both of these for inconsistency. And then because we've just used up that row for our opening balances, even though our lease term hasn't changed, we'll need to add one row to our schedule to get to the end of our lease term. Then let's add both the post-modification totals and entire lease term totals to the bottom while we're here. So this first line we'll call post-modification totals, and we'll use SUMIFs to sum up anything after the effective date. Then we'll lock our cells and copy this over. And now we can add a second total. We'll call this lease totals. And here we'll simply sum up everything over the entire lease term. Now the values are all the same because we haven't updated our effective date, but they'll change in a moment as we update our lease list. We'll change our identifier to 1.1. The measurement trigger will now be modification. The effective date of the modification is May 1st, 2026. The termination date hasn't changed, but the remaining lease term post-modification is now 31 months. And then because this is a change in consideration only, paragraph 842.10.25.11 requires us to reevaluate the discount rate as of the date of the modification. So let's assume we've done that and our updated incremental borrowing rate is 6.55%. And while I've already spoiled that this will become an operating lease, technically at this point in the process we don't know that yet, so we'll do things correctly and leave this blank for now. Then back on our 1.1 worksheet, we will update our identifier, and then we can change our payments to reflect that they have all been reduced $1,000 by the amendment. And then our first payment post-modification will be on May 31st, 2026. And relatively quickly, we've been able to determine our new liability of $129,356.68. With that information, let's finish the updates to our lease liability schedule. Our opening balance here will be the present value of our future payments post-modification. And our interest on our opening date is 0. And then just like we did for our remeasurement, let's update our long-term balance calculation. It's actually calculating correctly right now because we only have 5 periods pre-modification. So it will never include any of those amounts in any period over 12 months from now. But we'll update it anyway just for consistency. So what we did is just added a second criterion here, looking at the date column and ensuring we're only adding things greater than or equal to the effective date. And actually we'll lock those cells and we can copy that down. And as you can see, we're now successfully amortizing our liability to 0 over the lease term, and the liability portion of our schedule is updated. So with that determined, we can now calculate our change in the liability on the date of modification. So let's add this to our lease liability section, and this will equal our remeasured liability less the total liability immediately pre-modification, which comes out to a reduction of $27,406.56. So we can now make this entry in our accounting system to account for this modification. And just like our remeasurement, to handle the current and long-term portions of our liability easily, let's just completely clear them out. So our current equipment lease liability as of May 1st, 2026 is $58,424.86. And our long-term equipment lease liability is $98,338.39. which are off from our schedule by a couple pennies just due to rounding to the penny here in our accounting system. But let's now make a journal entry to update these to our post-modification balances. So this will occur on May 1st, 2026. First, we'll debit our current equipment lease liability for the $58,424.86. Then we'll debit our long-term equipment lease liability for $98,338.39. Then we'll credit our opening balances for each after the modification, which will be $48,041.71 to our current equipment lease liability, and a credit of $81,314.98 to our long-term equipment lease liability. Then the other side of our entry is a credit to the right-of-use asset for the change in our total lease liability, which was $27,406.56. Now if we save and close this, you'll see our right-of-use asset balance has now been updated to $135,902.44. So we'll want to keep that number in mind as we continue this. And then our current and long-term equipment lease liability balances are matching the opening amounts we calculated on our modified lease schedule. But we do have one item to finish, and that's our classification, which will impact how we calculate and account for our lease expense moving forward. So we'll take that up in the next episode as we continue through this and classify our modified lease.